Hormuz, thank you very much for that. So that's Chris Wood with view coming in through in his Green and Fear portfolio. Rohit Srivastava is with us, founder and strategist at Indiacharts. Rohit, just down and down and down. Last time we spoke, I think we were at least a few hundred points higher, maybe 1,000 points higher, right? So it's pretty fast and furious on the downside. What's going on at the margin, and what's your view now?
So a lot of the selling, of course, has happened in stocks. Nifty has been very slow. It has fallen on one or two big days like today. Rest of the days, it has actually spent doing nothing through February, which has caused its own sense of anxiety. But when we look, below the surface at what we call as market internals, various technical indicators, sentiment, all of them just going from extreme to extreme. In fact, today, I think both a combination of short-term, medium-term, long-term data points are all coming together, telling you that the market is oversold. So clearly, the first thing it means I cannot be selling at these levels. There has to be a buying opportunity somewhere. But it does bring you back to how do you do that? When do you start acting? And you have to actually wait for a price reversal. But that's, of course, when you think of traders. Now, if you take a slightly longer term view and you think from an investment standpoint, then these readings, especially the longer term ones, are what you would look for to start being more aggressive in the market in terms of deploying money. You don't always get to these kind of levels and these kind of readings, and so it's very, very rare. And months ago, if we thought you could actually get back to the election zone of the market where it
what kind of since the longer term indicators are the ones which are useful, give us an example or two.
Yeah, I mean, the simplest thing is look at the number of stocks which is above the 200-day moving average. The number right now in live markets is at around 9% on the Strike platform that we use. And the number in 2022, when we hit 15,200, was 15%. So that means we are at a lesser reading, which means very few stocks are above the 200-day moving average. 91% are below. The only last time we had a reading like that, probably at around 5% or so, was COVID, right? So this is now the lowest reading since COVID. Even if you take a very well-known indicator like the RSI, the relative strength index people used to gauge over bought and oversold condition in stocks, the Nifty RSI today is the lowest since COVID, and this is the first time that the domestic institutional investors have a long position. This is the highest long they have since we bottomed in March of 2023. So one by one, a lot of indicators are going off the charts. I mean, the 40-day advanced decline ratio is at the lowest since wherever it was in, I think, around COVID. So it's gone below where it was at 15,200. So all the readings are now matching COVID. Forget 15,200. And when you see something like that, you say, well, how many people remember buying at the COVID lows? And if you get the same kind of reading, why wouldn't you be buying now? Except that your mind is all washed up with sentiment based on global market or local news or something. There's no local news also. So there's actually nothing except we are now watching the globe because most of the domestic news flow is behind us.
Okay, all right. Hi, Rohit. Valid points you're making out there. But, what would give you more confidence? Currently it's one-way slide, 22,100. One would have thought, 22,000 is coming sometime during the March series. First day, bang, it's in there. So, what are the levels you're looking at in terms of support? As the point you mentioned, I think on RSI is sub 25. And I think, that's at a multi-month low, if I'm not mistaken. Multi-year low on that one as well. So, what are the levels you're looking at in terms of a support? And if we do see a bounce, at what level will you get confidence that maybe it can extend itself on the upside? Because for the time being, it appears like we're in a sell on rise market.
Yeah. So I think the downside risk right now should ideally get capped closer to 22,000. Okay, that gives you around 130 points more down from here. Potential. I'm not saying it will get there, but that's where I think mostly you will not break that right now. Looking at the setup is what I think. And if I think of, okay, above what level, you would start thinking, okay, the worst is done. If I have to put an upside level, probably above 22,500. But what we are looking for, see, we are on the 8th consecutive day of decline. We saw something like that even in February, from the 5th of February all the way to 14th, we had 8 consecutive down days, and then we turned positive only for one day. And now we are down for another 8 consecutive days. We call that time equality. So somewhere in terms of time, if we do even turn positive on, Monday, I would start believing that maybe the bottom is in. And, with this downside risk of 22,000, I would consider that as an initial indication of, things turning positive. And then we look for it actually crossing 22,500, looking at our momentum indicators to give a buy signal and so on.
All right. 22,000, 130 points. I think after a big decline, the street would take that as a bottom, telling you that, okay, 130 points is a bet that one, who's looking at an upside from current levels would not be very worried about from here itself. Let's talk about individual stocks. If the markets were to move higher to levels beyond 22,500 and thereafter, if you're looking at momentum indicators there, what would the stocks, according to you, be the ones that would lead that run?
So I can't name specific stocks, but I'll tell you the sectors that are holding out, and that is how we study it. Like if I just take the decline from the 5th of February to the 28th of February, so we do a heat map test, which is essentially looking at what is the relative performance during this fall, what has held out best. And the top two are metals and financials, right? So metals and financials, I think, will top the list in terms of where you want to be. They are holding out even in the fall, not falling much. Maybe some are, but most of them on average are not really falling much. In fact, the bank nifty has not even made a new low since January, which itself tells you where it stands. So I think those are the two sectors within which I would find the key ideas initially. But I do think later on, as things pick up, you will find other opportunities in some of the most beaten down.
Rohit, banking and what's the other sector?
Metals.
Metals. Banking. Yeah, please go ahead.
So other areas which are beaten down where I would really look is going to be PSU stocks. Because if again I look at, say, a slightly higher time frame, I look at the weekly RSI of PSU stocks, they are back to sub 30. Okay, and the last time that happened was in the last bear market. So you're sort of getting to very oversold readings even in some of the sector indices, like I said, PSUs, maybe even PSU banks. So that entire PSU basket is getting very, very oversold. And these are all areas which are not extremely overvalued, like the whole fear which has been around mid caps. These are the segments where you really find value. So that's where I think you'll find the opportunity initially.
No, got that. By the way, Rohit, so you track global markets, etc., also closely, and that's the other point which many have been talking about, that is a top in for US markets. If that is in and there is a meaningful pullback, what will that mean? Will that put more pressure here? Will that add to the pressure, or will it relieve some pressure? What's your sense?
So if we do get a meaningful top in the US market, the answer would be an obvious yes. And there are basically two macro factors that we look at to derive the answer to that question, which is essentially what are bond yields doing and what is the dollar doing. Now, if you ask me more than a month back and have been on air, we are probably looking at, a long duration bearish phase in the market, and we were hoping that, it'll stay that way. You'll get bear market rallies along the way, which is sort of what has happened, but the bear market rallies have been very small. But now, because the dollar started to roll over a bit, and more significantly, bond yields started to decline sharply. And clearly, that is what the US is working towards. In all of these deals that you're hearing behind the scenes, the idea is that they get their costs down, expenses down, and eventually get yields to go down, so they can at least keep their domestic spending, but not cut down on the external side. Now, what all that means is that if you're getting interest rates down, that could actually be a positive trigger. Has that worked in some places? So you're actually seeing outperformance in Europe, right? European markets last week also were making all-time highs. They only corrected a bit and they're bouncing back today. They're not falling as much as the US anymore. You're not seeing that in China also. You're only seeing it in some markets which are more volatile in Asia. Most of the emerging markets, maybe Japan, and specifically, of course, India is reacting to anything. We are not even reacting to the upside in the US when it happens. So very different situation. So the world markets, when they are so divergent, see, if this was a global sell-off, then you would have seen Europe also, falling off a cliff along with the US, which is not happening. So I'm reading the idea that you'll get a weaker dollar, or at least weaker yields will eventually drive a weaker dollar, as being positive for emerging markets. And that is why I started to think maybe after a 5-month decline or 4-month decline, we could be at the end of something. And it may be a little early to say that this is going to become a global turmoil.
Okay, so not a top in that sense in the US as well then, and lower yields, lower dollar is broadly how you're thinking about those two variables as well. And those, I mean, generally, as you said, have been positive for EMs. Rohit, we'll leave it there for now, but interesting conversation, and we could have gone on, and we will continue this chat later. Thank you very much for being here on CNBC TV18. We'll take a break. Deepan